Losing money on trades that should have worked is a common problem for traders. They often take positions against the market's momentum, believing they're identified a smart opportunity based on a small price movement. The market then continues in its original direction and their trades fail, resulting in significant losses. This happens because they misjudge the broader trend and act on implement incomplete information. It's a repeated mistake that drains their account and makes them question their decision-making process after each loss. In this video, I'm explaining how to trade with the market trend and avoid these issues. I'll demonstrate a clear method to identify the trend using basic tools so you can determine the market's direction without confusion. You'll learn how to enter trades that align with that direction, increasing your chances of profit, and how to avoid taking positions that oppose it. By following this approach, you can reduce losses from fighting the market and build a consistent record of successful trades over time. At this point, I've got a simple, practical answer for you. It's something beginners and struggling traders can easily start using. I rely on a free tool called the Momentum Bias Index. It's by Algo Alpha. It's designed to help you see exactly where the market's string is pointing. This isn't about overcomplicating things. It's a straightforward way to measure momentum and make sense of what's happening. Here's how it works in a way that's easy to grasp. The Momentum Bias Index looks at the positive and negative shifts in the momentum and compares them. It calculates which side is the stronger, so you can tell if the market's trending up or down. Okay, let's get into the practical stuff. How do we actually set the Momentum Bias Index on your chart? If you're using TradingView, which is an awesome for beginners and struggling traders, this is super easy to do. First, open up your chart. Any markets you're trading works fine. Then, up at top, click on the indicators button. It's look like a chart icon in the search bar that pops up. Type in Momentum Bias Index. And look for one by Algo Alpha. Once you see it, click it and boom, it'll drop onto your chart. You'll see the oscillator appears below your price action, ready to help you spot the market's direction. Now before we start using it, we need to tweak a couple of things to make it work best for us. It's not complicated, I promise. After you added the indicator, click the gear icon next to its name on the chart to open the settings. First thing, let's keep the source set to close. That's the closing price of each candle and it's perfect for what we need. Next, adjust the momentum length to 9. This controls how far back it looks to calculate momentum. Then set the bias length to 4, which helps measure the trend's strength. After that, change the smoothing length to 14 to clean up the signal a bit. And finally, set the impulse boundary length to 27 to catch those bigger shifts. Don't mess with the standard deviation multiplier, just leave it as it is for now. Once you've got those numbers in, scroll down a bit in the same menu until you see the wait for time frame close option. Go ahead and turn that on. This makes sure the indicator waits until the candle fully closes before updating, which keeps things steady and reliable, especially if you're just starting out. Now, hop on over to the Style tab. Here, you'll see a bunch of options for TP signals. Those are take profit markers. Just disable all them to keep the chart clean and focused. Then, look for the candle color option and switch that on. This ties the indicator to your candle, making it easier to see the trend at a glance. But now, it's time to bring in another tool to level up your trading game. This one is called EMA Difference and Stochastic. It's a combo that's perfect for beginners and struggling traders who want a clear picture of what's going on. The indicator mixes two classic tools, the exponential moving average or EMA, which tracks price trends over time, and the stochastic oscillator, which shows whether the market's overbought or oversold. What makes it cool is how it shows you the gap between two EMAs and pair that with the stochastic crossover signals all in one place. It's like having a dashboard that tells you when the trend is shifting and if the timing's right to jump in. Trust me, this is going to make spotting opportunities a whole lot easier. So head back to the trading view. At the top, click the indicators button, the little chart icon we used before. In the search bar, type EMA difference and stochastic. Once you find it, click it and it'll be added to your chart. Okay, now that we've got the EMA difference and a stochastic indicator added to your trading view chart, click the gear icon next to the indicator's name to open up the settings. Then head to the inputs tab. Here's what we changed. Set EMA 1 to 150. This is faster moving average that reacts to price shift. Then EMA 2 to 250. 250. That's the slower one, giving you a bigger trend picture. For the stochastic settings, adjust %K to 7 to make it more responsive, but leave the %D and a stochastic link at their default values. Those defaults works fine for now, and we'll keep it simple so we can focus on what matters. Next, head over to the style tab to make this thing easy on the eyes and super clear when you're scanning your chart. Look for the histogram option. It's showing the difference between EMAs, and switch it from bars to area. So it's a smooth fill instead of a choppy lines. Now let's set colors. Make color 0 green, which we'll see when the faster EMA is above the slower one, hinting at an uptrend. Set color 1 and 2 both to white, then set color 3 to red. No other changes needed. This tweaks gives you a clean, practical setup that's ready to roll. Alright, now we're getting to the good stuff. How to actually make money with these tools by setting up solid entry, a stop loss, and exit rules. Let's start with the buy trade setup, because it's where it all comes together for beginners and struggling traders. With the momentum bias index, wait for a green histogram bar to push above the impulse boundary. You'll see it marked with little dots on the chart. That's your first clue, a buy signal's forming. So now draw a vertical line right on that bar so you can match it up with the candlestick on your price action chart. It's like pinning down that exact moment things start moving. But hold off on jumping just yet. We need confirmation from the EMA difference and a stochastic indicator. Check if the area on the same candlestick is green, showing the faster EMA is above the slower one. When both lining up, the green histogram above the boundary and green area, you've got a confirmed signal, and it's time to open your position. For keeping your money safe, risk management is key, and it's simpler than you might think. Set your stop loss just below the most recent swing low. That's your lowest point the price hit before bouncing back up. It gives your trade some breathing room without risking too much. For profit target, aim for double your risk. So if your stop loss is 10 points below your entry, look for take profit that 2 points above it. Now for sell trades, it's the same idea, just flip. Wait for the momentum bias histogram to stay above the impulse boundary with a red bar. Mark that signal bar and confirm it with the red area on the EMA difference indicator. Set your stop loss above the recent swing high and target double your risk. Easy, right?